Hey everybody, Jason Russell. Just wanted to record a quick video. I've been getting a lot of questions about, what this whole COVID thing is going to do to the housing market. A lot of my clients were kind of wondering, what's happening with my home value. People who are kind of on the fence about buying are wondering, what's going to happen to those values over the upcoming months. So I figured it would be good to kind of just share my professional opinion as to what the housing outlook looks like. So first thing to start with, I guess, would be to kind of talk about where we were prior to this whole COVID thing breaking out. So prior to the pandemic itself, the housing market, it was booming. Prices were increasing. Inventory was still at its lowest levels in 40 years. And the COVID is not changing any of that, right? So inventory levels are going to remain tight because new construction has slowed due to this whole COVID-19 situation. But at the same time, demand for home ownership has been pent up, and a lot of people who have been living in apartments and tight spaces, they're going to be looking for more space and distance. I think this has changed a lot of people's outlooks on those types of things. So the suburbs could certainly see a bit of a boom. And remember also that the biggest driver of home buying historically is having children. And with everybody stuck in the house together for 3 months, there's an expectation that child's births should be looking at increasing a year from now. So keep that in mind. Now, the homeownership rate, it's risen to 65%, and with the fastest growing segment of that being people in their 20s. And with demand rising and supply remaining tight, even with a lot of people needing to sell due to financial hardship caused by coronavirus, home values should be well supported into the future. Now, a lot of you are going to say, hey, I'm just going to do 2010 and I'm just going to buy a house for dirt cheap when people get foreclosed on. I don't think so. And that the reason I think that is because of people's equity position. So right now, there are 81 million households that are owned across the United States. And 34% of those 81 million have no mortgage whatsoever. So there's no reason for them to lose their home because they can't make payments on a mortgage because they don't have a mortgage. And so they have plenty of equity to move up. But of the 53 million that remain that do have a mortgage, the average loan represents 53% of the value of that home, meaning there's tons of equity, even for homeowners with a mortgage, which means if they can't afford the home anymore, God willing, that doesn't happen, but if they can't afford their home anymore, they're not going to be forced to lose it, but they'll just sell it, right? Unlike 2008, where everyone was upside down, they were in an adjustable rate mortgage, or they took out 100% financing, or those kinds of things. That doesn't really happen anymore. So they're just going to, if someone is in that position where they lose their job or their industry is ravaged and they never get a job back, and they have to lose their home, they'll just sell it like a normal human being at normal prices because they've got the equity to do that. They're not upside down. So it's money that they're not going to just leave on the table. They're just going to sell the property. So the homes on the market for 65 cents on the dollar, like you saw in 2010, 2011, that's not going to be a thing. We may see some foreclosures, but for the most part, people will just sell. So ultimately, what it comes down to is the current market is just providing a really good opportunity to buy a home at an attractive price with growth continuing into the future. That growth may be a little bit more tepid than we're used to, but the fact that interest rates are going to be very, very low for the long term, I should say the medium term at least, that will open up tons of folks who couldn't otherwise buy a home before, who can now afford it. And you've got demand, and you still have the limitations on supply as far as inventory. So Econ 101 says home value should continue to be supported, and we should expect that housing will be a big driver of what gets us out of this recession that we're essentially going to find ourselves in because of what happened with COVID. So any questions, feel free to give me a call. Hope everybody's doing well, and talk with you soon. Thanks.